Good morning, Paul Georgie from Allendale. It's October 19th, Monday morning, and Steve's on vacation this week, so I'm trying to fill in here for him this morning. The grain markets under a little bit of pressure here in the early trading, uh, mainly for several reasons. One is the outside markets are also have got a risk-off attitude with the crude oil and the stock indexes, the equity markets under some pressure with the dollar being stronger. So the weather conditions around the world is also putting some pressure on the grains as the forecast for Brazil in the soybean areas, there's a lot more confidence that they will be getting some rain later this week, early next week. The wheat growing areas in Russia has got some rain, and Australia looks like there's a chance for some more rain there. So that's putting some pressure on the wheat, and harvest pressure is also another factor here in the corn and soybean markets that's putting some weight on it, at least at this point. This week we have no significant USDA reports. We do have the crop progress report out this afternoon where trade is looking for corn harvest to be about 60% complete, soybean anywhere from 70 to 75% complete. One of the big questions that the trade has is where are the farmers going with all this grain? The elevators, processors are still bidding abnormally high prices for immediate delivery of grain. Farmers just aren't selling grain right now, so they're putting it away in storage facilities and hope for higher prices later on. And that's what's keeping us supported here on the downside. Whenever we get to some key support, the bin doors completely closed, and that helps us out as we try to find a bottom here. The corn market should have some pretty good support around the 370 area. The soybeans are floating around the $9 area, which we do have option expiration on Friday, so there's a significantly large open interest in the November soybean options at around the $9 strike. 370 also is a large open interest in the corn. So we'll watch those numbers as we go forward. CFTC released their numbers on Friday showing that the managed money funds sold about 25,000 contracts of corn, bought about 21,000 contracts of soybeans, which gives us the confirmation that they were liquidating some of their spreads. They were buying the soybeans, selling the corn here last week. Wheat, not much change there, only about 4,500 contracts, and they were net short there, continuing to lean on the wheat market. In the livestock trade, we had a lot of fireworks in the cash cattle trade late on Friday. We've had trades as high as 137 in Colorado, with most of the cattle trading between this 134, 136 area. Corn Belt cattle were in that 127 to 133 range. Looks like we're going to have some more fireworks this morning on the live cattle futures when they open here at 9:05. Should be some further buying there. We closed the October contract limit up on Friday, and expect some more strength there. As another issue that you've got to watch for in the cattle complex is not only the strength that we've seen in the cash market, but going into this week, we've seen the funds heavily short, and we've also seen on the CFTC report where the funds last week were big net sellers in live cattle. So expect that we could see some fund short covering there, as well as the strength promoted by the strong cash cattle trade. Cutout values, choice beef was a little bit higher, 47 cents. The select was down 87 cents. Pork cutout seen $1.41 higher. The pork complex, we've got the December contract at about a $10 discount to the cash index right now. Tells you that trade's looking for bigger numbers as we go forward here, but the wide spread that we've got in this cash to index relationship should give us some underlying support in the lean hog futures. So watch that. Keep in contact with your Allendale broker. We'll try to help you out any way we can. If you got any questions, give us a call at 800-262-7538. We wish everybody a very successful trading day. We'll talk to you tomorrow morning.